Nobody can nail the peak. And if they say they can, they're lying. If they do, they were lucky. But I do believe that using the math that we can get a bunch of sales that are around the peak and capture most of this profit. Hey, it's Mike Maloney and Alan Hibbard once again with the GoldSilver Show. Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Great. So you've got some great information you've put together. Let's go over it.
Yes, we have some viewer questions and comments. So we got a handful of them to go through here today. The first one comes from something I don't know how to pronounce. Well done, Goldman Sachs. You learned what illiterate... Okay, this was a little mean, okay? This was on a video we made recently about the 60-40 portfolio. And our viewer here says, you learned what illiterate peasants in the Middle Ages knew and what merchants and the middle-ish class of classical antiquity strongly suspected. And that is basically that gold improves any portfolio. That's basically what Goldman Sachs concluded in their research, and that's what we said in the video.
Yeah, and we were sort of welcoming Goldman Sachs to the party. You had come up with a chart very similar to one of the charts that was in that video that they had generated, how gold stabilizes the volatility and simultaneously gives you far greater returns. And what we do need to do sometime, though, is separate the chart that we had showed a 30% allocation to gold, but that was from 1971, and it incorporated the bear markets. What happens when gold is in a bull market? You should have more. When I first started, I would tell people, yes, I'm fully diversified. I own both gold and silver. And that was it. Really, I owned gold and silver, and that was my total investment portfolio. And it worked out really well.
Yeah.
Once again, Goldman Sachs, welcome to the party.
Yes, better late than never.
Yep.
Very nice. All right, our next comment here is from Isabella. Maloney and Russ Gray. They nail it. Gold is the ultimate escape hatch, while Bitcoin's the digital flare gun. But let's be real. When the dollar trap snaps shut, the herd will stampede into both. Gold for the ancients, Bitcoin for the anarchists. Smart money? Well, they will stack physical first and then gamble on the tech. What do you think?
Well, I've got gold. I'm not sure if I like being, categorized as an ancient yet. I am approaching 70, but I still feel young. But yes, this is correct. I think you should stack the physical first and then gamble on the tech. The physical it can't go to zero. There's no counterparty risk. With the tech, there is not really a counterparty, but the internet has to work for it to exist. There has to be power. And it's been extremely volatile. So we don't know what is going to happen in that area. So even though its history thus far is spectacular for Bitcoin, it's an undecided future. We don't know what is going to happen, actually. So stack first, then gamble on the tech. I absolutely agree with it, and that's exactly what I did.
Yep. And my portfolio is entirely gold, silver, and Bitcoin. So I feel a lot like the way you felt starting out, Mike. And I agree. If it makes you feel any better, I as a gold owner, I don't feel like an ancient. So, it's okay.
Yeah.
We're in good company.
Yeah. Okay.
Awesome. All right. Our next comment here, Arnold Villeneuve. I like the way that Mike sticks to the facts and the numbers. No FOMO, no fear mongering like so many other precious metals podcasters. Well done, Mike.
Oh, well, thank you very much. I appreciate it. There isn't any reason to sell precious metals using fear tactics, which the majority do. The fundamentals under it. This is an opportunity more than, yes, it's insurance. It's a safe haven, but it's also a tremendous opportunity. It's at all times, always an insurance policy and the safe haven asset. But I've said many times, there are these rare moments in history where it also, beyond being the insurance and safe haven, it also becomes the asset class with the greatest potential gains of purchasing power. And I believe that, I wrote that in my first book. I'm sticking by it. And we have been seeing it do exactly that. Recently it's had some pretty big moves over the past year and a half. It's been phenomenal.
Yeah, absolutely. It has. It's got to feel nice to be vindicated and see your thesis play out in real time. That's awesome.
Yeah, right.
Yeah. Speaking of, we have a question from Emerald Acre, Ohio. Gentlemen, thank you for the videos you put out, and I have learned much by watching since the Hidden Secrets of Money series. And I've been teaching my kids what you talk about. Awesome. A question that came to mind while watching this particular video is, number one, what signals or price range should I look for to indicate that gold, silver prices are nearing cycle highs? I want to maximize my profit, sell at appropriate prices, but I'm not looking to be greedy. And number two, after the blow off top, is there an indicator I should look for to buy? What is next cycle's low? Thank you for teaching people how to fish, not just handing out fish that would stink. Okay.
So I've addressed this numerous times in the past, but I want to handle the first question first here. What signals? The price doesn't matter. So where it says price range, just delete that part. What you want to do is be measuring it with other assets, and I will be doing this. We have an insiders club for people that make certain size purchases from goldsilver.com. And those insiders all learn what I'm doing with my portfolio. I haven't made any changes in several months, so I haven't made a posting for several months, but I will. And by measuring, we're going to be doing back testing. I think I've got 23 different indicators now, and I can't tell people what most of these are. The minute everybody starts following one indicator, it stops working. And so you don't want to do that. However, two of the main ones that everybody does know about is the stock market compared to gold. And I use the Dow Gold ratio instead of the S&P. You and I did a study on this, Alan, and their correlation over long periods of time is they're almost exactly the same, S&P and Dow. So you just take those as the proxy for stocks. But the Dow, the points are high enough to where it gives you whole numbers when you divide it by gold. It's not 0.0 something. It's a number. And it was hanging out between 3 and 5 in the early 1900s. And then in the 1920s, it went into a bubble. And by 29, it was at 18 ounces of gold to equal the points on the Dow. And then we had the stock market crash, and it went down to just 2 ounces. There was a day where the stock market, gold was $20.67 an ounce. The stock market bottomed at 40.22 points. And so 2 ounces of gold bought the Dow. And then we went back up into a bubble in 66. You can see it there of 28 ounces of gold. However, the Dow, during that period of time, it went up, and in 1966 hit its head on 1,000 points and couldn't bust through until 1982. So the first one, you've got gold that's fixed in price and stocks moving. The second one, you've got stocks that are pretty much fixed in price and gold is moving. And when gold became freely traded in 1971, it just made up for the suppression with a vengeance. And it went all the way to 1. There was a day where where gold hit 873 on the intraday high on the Chicago Mercantile Exchange, and the Dow was at 873 points. So 1 ounce of gold equaled the points on the Dow. And then we went into the greatest bubble in history in 1999, 2000. In 1999, it hit 45. And currently we are at 90. No, we're at, what did I say earlier? 13 and a half right now is where it's at. And so it's going back down under 5. And so I wouldn't look at selling until we get to that 5 area, but then there's a confirming indicator that you want to use. So if the Dow Gold is below 5, I think that it's going to go to 2. I actually think that it's going to go to 0.5, because we're coming up, when the pendulum swings, the further it swings to one way, the further it's going to swing to the opposite direction, usually. And that's what you see in this chart, 29 to 32, and then 66 to 1980. You see that when it's coming off a higher high, it goes to a lower low. And I believe the same thing is going to happen this time. And so you may see the price of gold double whatever the points are on the Dow. So just to make the numbers, so if it's at 13 today and it goes to 0.5, you're going to be able to buy 23 times more shares of stock if you sell stock today and buy gold with the proceeds, right, Alan? Is that
27 times? 27 times. Yeah.
Oh, it's at 13.5.
So yeah, double it.
Yeah.
In 27.
Yeah. Yep. 27 times. So you want to use this as the confirming indicator. And I think that you want to wait until the Dow Gold ratio is at this area of 5. And let's go to the gold silver ratio now. The gold silver ratio, this is the long-term chart, and it shows that it used to be around 15 to 1 for, hundreds of years, 14, 15 to 1. Then let's zoom in on this. Now, this I don't believe is daily data, because in 1980, this hit 14. You can see that it hit 30 back in 2011, and we are currently at 93 and 92 or 93. And so when this gets down to 30, you want to be using this as your, it's okay to use the Dow Gold as your sales indicator. If this is if it's still higher than 30, it means we still have a lot more room to run on the Dow Gold ratio. To me, that's what it means. Now, for people that are goldsilver.com customers and qualify as insiders, I'll be telling them what I'm doing, and what my plan is that when this gets down, it's 14 in 1980. When this gets, both of these, the Dow Gold and the gold silver ratio, get down into certain ranges, I'm going to be selling 20% of my precious metals holdings. And then I'm going to wait, and if it gets to the next number, 20% more. Well, that means it could double each time, and you didn't sell everything. So you're taking advantage of that doubling. And then again, and what I'm trying to do is use math to get around the peak of this. Nobody can nail the peak. And if they say they can, they're lying. If they do, they were lucky. But I do believe that using the math, that we can get a bunch of sales that are around the peak and capture most of this profit.
Yeah, makes sense. And that's the same strategy that I plan to use as well.
So,
yeah. Buy low, sell high, and try to round the tops, round the bottoms. Multiple buys at the bottom, multiple sells at the top. So.
And then I've got another book that will come out sometime or another. I don't know exactly when. And it's all about these big cycles and doing this style of investing that only requires a couple of trades in your lifetime to become extremely successful.
Yeah. So stay tuned, everyone.
Yep.
Yeah, that's gonna be a great one. Awesome. Our final viewer comment here comes from John B. Any gold left in Fort Knox? I remember Doge was going to audit there, but it never happened. Last audit was in the 70s. No one was or is allowed to see gold reserves in Fort Knox. Why is that the case?
I do believe that we are going to audit Fort Knox. It's just that after Trump said all of this, and there was all this rhetoric, by the way, that was before Doge existed, I believe. So it wasn't Doge that was going to audit it. It was just he wanted it audited by the United States government, that we audit our gold. And I'm pretty sure that people came to him from the Federal Reserve and others and said, well, you can't really do this right now. We need some time to be able to get the gold back in there because it's all been leased out. Yeah. We know that central bank gold leasing does happen. That is just a fact. It's out there. But when it comes to, is it in Fort Knox? Well, it's been rehypothecated. It's been sold into the market, but somebody owes it back to us. And we're seeing these tremendous gold inflows. Part of it was to stock up the commodities exchange, but the other part is exactly this. It's flowing into Fort Knox right now. The proof of this will be if we get an audit that has bar numbers and purities, because most of the gold in Fort Knox is supposed to be coin melt. So it's only supposed to be 92% gold. And when they do the audit, you watch, there's going to be a whole bunch of brand new pure bars in there. So I think that's what's going on. Either way, if they do audit this, you need to watch those videos, like that video that this is a comment from, a new gold standard. There's 3 videos that we did that that show the evidence that we could be headed to a new gold standard. That really would help to stabilize the world, but it would put us in a very powerful position because the U.S. has the most gold. And so it's for Trump, it's like a win-win-win, just like the video we did recently that had the stable coins in it. This truly would be a win-win-win. The dollar keeps its dominance if it becomes gold backed again. It doesn't come under question. We have the most, so we get to continue running the world monetary system. And it would start to cause trade imbalances to go back into balance. Gold is a self-balancing mechanism. And at that point, all of these objectives that Trump has, you'd just be checking them off the list. So will we ever get to see it? I believe yes, but it's going to come more toward the end of his term, not at the beginning. When we have the midterms, though, he's probably going to lose a lot of power. So right now, he can sort of ram almost anything through. So this might happen just before the midterms. I have no idea, but that's my opinion.
Yeah. I hope we get it. I hope we get an audit. I don't think we will, or if we do, it'll be phony baloney audit. Just
where he says the last audit was the 1970s. That was an audit. It wasn't an audit. It was a photo op. They opened up one door that had gold, one vault out of, I can't remember how many vaults they've got, but it's quite a few. And they opened up one. They showed them that there was gold there. We don't get to know if there were more rows stacked up behind that. It wasn't an audit. It was a photo op. Oh yeah, there's some gold.
Yeah, we might get that again.
Yeah, we don't know if that gold was leased. Normally when it's leased, it does get shipped to like a mining company or a refinery that is currently shut down but owes gold, and then they replace that gold later. And so we'll know what kind of hanky-panky was going on if we ever get to see bar purities.
Absolutely. Well, thank you for that, Mike. And thank you to everyone for watching, and thank you for submitting all your questions and comments. And we'll see you in the next video.
Awesome. Thanks, Alan.